And is the crypto party over? Well, going by the past few days, it's been definitely a carnage for cryptocurrencies, which is unabated. There's been some respite in the global crypto market relatively, though. The market cap has actually increased by 4%, but it's still below the $1 trillion mark. Most major tokens are trying to pare losses. However, with the FOMC outcome anticipated, investors may choose to dump risky assets even further. So how do we see the crypto space and what really is going on? Ajeet Khurana, Bitcoin expert and founder of Genezis network, is joining us on the show. Ajeet, great to speak with you. Now, help us put into perspective what we're seeing. And let me start with the question I posed right in the beginning. Is the crypto party over? If you look at the major US-based crypto companies, they've begun to downsize. They've begun to freeze withdrawals in some cases. And it's becoming clear that not all of them will survive. Do you think this will clearly have a ripple effect?
To begin with, a lot of protocols, Terra Luna a couple of days ago, Celsius now, are sending very negative signals. And when people look closely at them, and I fear to say another dozen or few dozen more protocols, they were protocols designed to survive only in the bull market. So we have to see some more carnage as far as specific protocols is concerned. But as far as the market is concerned, frankly, it is almost exclusively being driven by investors taking their money out of the market related to the Federal Reserve interest rate hike, as in that is the big driver today.
No, so when you say specific protocols, just put this simply for us, Ajeet. There are more currencies that are going to crash?
So what tends to happen is that several cryptocurrencies were giving extraordinary rewards to token holders. Some of them, like the Terra USD, were doing it in the form of plain interest rate of around 20% on US dollar deposits. Some others were giving it in the form of play to earn or walk to earn or do something to earn. And a lot of investors did not ask, hey, you are paying me that money. Where is it coming from? Where it was coming from was an ever increasing token price, which would then be liquidated in the market and support this. Now, this is sustained only when token prices are going up. When they are going down, you can't support that economics. So people who did not take care of the underlying business that some of these tokens represented are in for a bad time. Please note, this represents a small minority of the tokens.
But the fact is, Ajeet, even your big tokens, even your top line cryptos have cracked terribly. I mean, they're down over 50, 60%. So it's not like this is restricted just to the smaller tokens or, you know, some of these elements that you've talked about which don't have a clear base. And you said earlier that this is happening because investors are pulling out. Well, that's how markets crash.
Absolutely, you're right. So there's two forces. One, the overall liquidity just rushing out. Our crypto market cap in November of 21, which was like yesterday, was 3 trillion. Today it is just shy of a trillion. If you had purchased Bitcoin in mid-December, actually to be precise, 15th December 2020, it was at the same price as it is right now. Anytime thereafter, you're making a loss. But here's the interesting point. Anytime before that, like literally anytime, you're still in a profit. So crypto is very volatile. People should enter this space with that knowledge.
It's fine that it's volatile and enter the space with the knowledge, but that doesn't answer my basic question. Are we seeing what we had seen like the dot-com bubble? Are we seeing a cleanse of those proportions right now? Or are you saying that this is just tied to the FOMC meet and we'll know what's happening in that in a few hours from now, and that's where the pain ends? Is this a bigger problem?
I was part of the dot-com boom and then the subsequent bust also. So I think that something of that type is going on. However, what happened there is that almost all dot-com companies died and a few, the Amazons, the eBays, etc., emerged. I think that cleanse is actually still to happen in the future. This time around, it is the weaker protocols who cannot survive a small downturn. The stronger ones, such as Bitcoin, is also down 70%, of course. But in the past, there have been 3 bear runs when Bitcoin has lost 85%. So it has survived that. So I don't see a survival issue here, but I do see a bear market. It's a roaring bear market.
So, you know, the fundamentals have been shaken in a sense, isn't it, with what has been happening? Remember, cryptos were always positioned as a hedge to inflation. And we have seen global inflation pervade. It's clearly not a hedge. It is impacted by what's happening in other markets. It's become enmeshed. And it's not different from any other asset class. Some of those very brutal realities have now been exposed.
You are right. What has happened in the past is that crypto lovers have always called it a non-correlated or an uncorrelated asset to other asset classes. They are right, but under a specific assumption that there is not a significant change in money supply or interest rates. Because when that happens, the almighty liquidity washes everybody, including crypto. But if you look at those periods where interest rates have remained rather stable, then crypto has shown some early signs of being a non-correlated asset. It is still an immature asset. It will take a long time.
All right. I like the way that you've described crypto lovers as a completely different category. You're not counting yourself as one of them anymore, Ajeet?
Well, I was always a crypto analyst. I never got swept away, which is why when people would make this 5000x return and I knew what they were investing in was a wrong thing to invest in. But despite that, I couldn't get myself to do it because I was analytical in nature. So I am a crypto supporter. Crypto lovers are a little, not really analytical.
All right. So Ajeet Khurana is having his I told you so moment. Thank you so much for joining us as always. And important for you to understand what to do with your investments if you've lost a lot of money now. Go easy, go safe. Now, meanwhile,